Thank you, Jesse, for that warm introduction. You read it just like I wrote it. So it's great to see some colleagues here from my previous tenure running the FHA. And as Jesse mentioned, yes, I'm the first person to hold this job twice under 3 different administrations. I also want to thank my good friend John Taylor. Always a pleasure seeing you and the board members of the NCRC. Well, obviously, NCRC is a trusted partner to HUD in our efforts to secure greater economic freedom for low and moderate income households and minorities. In fact, we've relied upon you and your expertise for comprehensive services for almost 11 years. And by working together, you've opened the door to success for tens of thousands of families. I want to thank all of you for that effort. In fact, in 2018 alone, NCRC received just over $1 million from our Office of Housing Counseling, which will support its network of 25 sub-grantees, many who I'm sure are here today. So I want to acknowledge and express appreciation for the advice and support provided to families throughout the coalition's affiliates, which includes counseling and services to avoid homelessness, to find rental assistance, and receive pre-purchase, reverse mortgage, and mortgage foreclosure prevention advice. During FY18, NCRC provided services to over 10,000 households that help families purchase homes or avoid mortgage delinquency and worse, default. NCRC is also one of HUD's 4 national training partners. Its training grant from our Office of Housing Counseling has nearly doubled since 2015, from $589,000 to $1.1 million, and allowed it to train more than 3,800 housing counselors last year alone, and that's a success story all of us can be proud of. So I'm grateful to have this opportunity to share a number of the key initiatives that HUD is driving to ensure fair, equitable, and just access to our economy, and to housing in particular, which is most often the foundation of the productivity and well-being of our families. I had the pleasure of meeting with NCRC's Mortgage Finance Collaborative Council in Philadelphia back in October in my capacity as Assistant Secretary of Housing and FHA Commissioner. I was able to provide the Council with many of our goals for housing and for FHA, which I'll touch on briefly this afternoon. At that time, we had just announced $47 million in new housing counseling grants that will help an estimated 1.4 million households find housing, to make more informed housing choices, or more importantly, to keep their current homes. The grants will directly support the housing counseling services provided by our national, regional, and local partners and counseling agencies. In addition, we have awarded $3.5 million to the 4 national organizations, including NCRC, to train and certify additional housing counselors. As we all know, housing counseling improves housing outcomes for home buyers, homeowners, and yes, even renters. Last year, HUD published research findings summarizing the impact of housing counseling on families' housing options and choices. That research and studies by the Federal Reserve, the Urban Institute, and others have continued to demonstrate that housing counselors provide substantial benefits for first-time homebuyers and for families struggling to prevent foreclosure. I think that is an effort we can all be proud of. Well, as Jesse mentioned, in late January, I took on the additional role of Acting Deputy Secretary. So I now have 3 titles and 1 paycheck. So I will continue to lead housing in the FHA, for which we continue to recruit talent and to build an important team of experienced professionals. My Acting Deputy Secretary efforts will focus on the operations of HUD, including finance and budget, IT infrastructure, field policy, human resources, and yes, if I wasn't busy enough, disaster recovery. My priorities will be to improve our internal governance with tremendous help from our CFO, Irv Dennis, and General Counsel, Paul Compton, and increase the velocity of positive developments throughout the department. I do want to say a few words about one of the most important responsibilities I just mentioned, and that is our ongoing disaster recovery work. We were unfortunately given a stark reminder of that devastating impact of these events when the tornadoes hit Alabama a week ago yesterday. We can also not forget the disasters that affected millions of our citizens in 2017 and 18, including hurricanes Harvey, Irma, Maria, Michael, Florence, and the California wildfires. It will unfortunately take families and communities lengthy periods of time to fully recover. Well, HUD's role as a head of housing recovery support function means that we are a part of the team before, during, and most importantly, after the event has happened. We help place families in safe and appropriate housing in the short term and work to identify housing options for the long term when homes have been destroyed and families displaced. FHA, for its part, offered 19 regulatory waivers to state and local governments in the wake of these natural disasters, giving state and local governments increased flexibility to quickly get recovery resources to the families that need them the most. We extended a foreclosure moratorium and also updated our loss mitigation waterfall to help ensure that homeowners can stay in their homes without an increase in their payment or term to their mortgages. As we know, often natural and other disasters have an enormous and disproportionate impact on lower-income families and others who do not have the adequate means to recover. We are particularly focused on the elderly and disabled and lower-income families who need our support and assistance to get back to their normal routines. As for specific updates, Secretary Carson and I met with the governor of Puerto Rico a few weeks ago, where we discussed their ongoing needs and announced the disbursement of the first $1.5 billion in assistance. On March 1, HUD approved Puerto Rico's amended action plan for the second tranche of $8.2 billion in disaster relief funds. Thank you. In total, HUD will invest nearly $20 billion in Puerto Rico for long-term housing, for infrastructure, and economic development on the island. This is the largest grant of our kind in HUD history. Well, given this unprecedented event, HUD is working closely with Puerto Rico to put in place additional financial controls, which include having HUD staff on site to provide real-time monitoring to ensure that the funds are used appropriately. In fact, the HUD CFO and his team are heading to Puerto Rico today to continue those discussions. We also met with Governor Abbott of Texas 2 weeks ago, where we announced an additional $652 million for Texas families affected by Hurricane Harvey. All told, Congress has allocated $35 billion in community development block grant disaster recovery funding for HUD to award to 16 states and local governments in FY18. Well, HUD is fully committed to helping the citizens of Puerto Rico, the U.S. Virgin Islands, Texas, Florida, Georgia, North and South Carolina, California, and many other states impacted by these recent disasters so that they can rebuild their homes, restore their businesses, and rebuild critical infrastructure. I also want to acknowledge the important role of housing counselors in achieving results for these disaster victims. As HUD continues to play a vital role in securing safe, decent, and affordable housing for individuals and families across the country, we are instituting a number of policy changes and strategies to meaningfully impact the lives of the people we serve. As we know, there are significant pockets of the country where affordability is exceedingly difficult for reasons we are all too familiar with. There's material, supply, and labor constraints. There's overly burdensome regulations and restrictions on zoning and land use. And in some markets, population growth has driven the price of a housing beyond the reach of most working families, let alone those of lower and moderate income. Ultimately, HUD must do everything possible to leverage public and private capital to ensure we can meet the housing needs of communities and ensure those housing options are fair, safe, and affordable. Our mission includes an obligation to address and mitigate affordable rental housing needs, to assist future first-time, low and moderate income and minority homebuyers, and to serve as a counter-cyclical backstop when the private market cannot adequately capitalize the housing market. We must operate programs that are sustainable for borrowers, for renters, and yes, taxpayers. Well, I don't want to drown you in a lot of statistics, but I do want to provide some that give you a better context of FHA's effort to fulfill its mission relative to the home buying market This is all based on FY18. Well, 76% of our loan endorsements were for the purchase of a home, with an average loan size of $183,000. 83% of our purchase mortgage endorsements were for first-time home buyers. Breaking those numbers down just a little more, the average FHA borrower makes $62,000 a year, has declared assets of approximately $11,000, and maintains just 1 month's worth of reserves to cover monthly expenses. By the way, this is down from 2 months in 2017. To me, this is a fascinating statistic. The average age of the first-time FHA buyer is 38.12 years. It has risen steadily from 33.49 years in 2001. 37% identify as minorities. 43% of those borrowers are accepting some form of down payment assistance. Their average debt-to-income ratio is now 43.9, up from 41.2 in 2010. And the average credit score of these borrowers is 664, a steady decline from 687 in 2010. In the current environment, we are experiencing historically low, delinquency rates. Aside from a temporary spike caused by the hurricanes and other natural disasters in 2017 and 18, we are also seeing very low early payment defaults. However, we are seeing developments in the overall FHA book which give us pause, as I've noted with respect to first-time home buyers. These cautionary notes will require us to adjust to ensure we are providing a product that is sustainable for families moving from the rental market to home ownership. In order to continue to live up to that mission, we also need to manage the insurance fund in a sustainable way. In better economic times such as these, and notwithstanding the affordability challenges we are seeing in certain markets, it's incumbent upon us to build FHA's financial strength to a position that will enable it to be a counter-cyclical support whenever that is needed. The last financial crisis, FHA lending in the purchase market rose from 3% of the market to almost 30%, certainly demonstrating the importance of FHA's guarantee when private markets seized up and our borrowers needed us most. This highlights exactly the importance of housing counselors, who are here to advise and support along the continuum of a family's needs, and to prepare households for achieving their life goals, which we hope ultimately involve becoming a homeowner. Indeed, when borrowers are ready, there needs to be access to quality credit. And to achieve that goal, we must address where FHA has fallen behind. I believe a good number of folks in this room have repeatedly heard me loudly proclaim the need to modernize and streamline the FHA so that it can both better serve our traditional borrowers and greatly assist in access to affordable lending. So I was extremely grateful that Congress included, as part of the funding allowed after the partial shutdown, a meaningful down payment on funding for FHA's technology upgrades. In short, FHA borrowers and partners will be left out in the cold, and FHA's mission, the sustainability of its programs, and taxpayers are substantially compromised unless FHA sees significant technology investment. Outmoded application processes and FHA system outages have too often crippled the ability of FHA lenders to originate loans, harming their profitability and preventing FHA from efficiently serving its mission. As private capital investment is critical to FHA-eligible home buyers gaining access to the mortgage credit market, it is essential for FHA to provide more certainty to its lending partners. The significance of the trend of the large depository institutions reducing their mortgage lending to lower and moderate income households, and evidence that these same borrowers do not possess the same ability to attain loans elsewhere, has a potentially enormous impact on FHA's mission. It has possible risk implications for the insurance fund, but also for the access of our LMI borrowers to home lending from more established and well-regulated lending institutions. While we know banks are incentivized to invest in their communities and people through CRA, We also know that the large banks have pulled back dramatically from the FHA, and in recent years, we almost certainly know why. Technological challenges prevent access, and regulatory burdens and risks to lenders further prevent access. Well, HUD is working to provide greater regulatory clarity through upgrading technology and better transparency in the enforcement process. In addition to modernizing the technology and analytics that will light a path to FHA's future, we are evaluating policies that will be helpful to good actors who want to participate in our programs. The Secretary has directed us to work in consultation with the Department of Justice to review and address the use of the False Claim Act to pursue FHA lenders. Thank you. FHA and HUD's Office of General Counsel are actively involved in that process with the Justice Department. There will continue to be no room at FHA for bad actors, or for example, lenders who will not voluntarily meet their indemnity obligations. The goal is to be fair, and to be fair, we believe HUD needs to be a true participant in the enforcement process. Another top priority is to take a critical look at the loan level certifications. We have taken the approach that we are essentially going to rebuild the form from the ground up. To that end, we have worked to create a revised form that is intended to be straightforward and clearly aligned with the legal and regulatory requirements every FHA-approved mortgagee must comply with. However, while we believe we have created a form that meets the goal of the industry certainty and protects the FHA's ability to enforce serious program violations against bad actors, we are looking to hear from you. Working with HUD's General Counsel, FHA is streamlining the annual lender certifications to better align with the National Housing Act. You should expect to soon see a 30-day notice of proposed information collection in the Federal Register prior to implementation later this year. Well, shifting gears for a moment, FHA's multifamily credit enhancement on affordable and market rate financing has long been a successful public-private initiative that has increased housing options for numerous low to moderate income families. As we face budgetary pressures and an aging affordable housing stock, our efforts need to focus more on leveraging private financing to address these mounting capital and infrastructure needs. As such, our Office of Multifamily Housing is looking to expand on the number of FHA transactions utilizing the housing tax credit for equity. As Secretary Carson announced last month, we have published a notice to further align HUD products with the programmatic requirements of the tax credit program. It is expected to improve HUD's responsiveness and processing times, which will further increase HUD's affordable housing volume. And we look forward to getting your input. Secretary Carson is now leading the White House Opportunity and Revitalization Council as chairperson. The council is an extension of the Opportunity Zones, a provision of the Tax Cut and Jobs Act designed to boost public, private, and sector investment in affordable low-income housing and necessary community amenities for the most historically neglected and distressed areas in our country. Private investors will be incentivized to pool capital and risk in a simplified vehicle designed for substantial, meaningful, and long-term investment in our nation's most underserved areas. Lastly, in September, I was proud to stand with Secretary Carson in Austin, Texas, to celebrate the 100,000th unit converted under the RAD program. By the way, this is an initiative that began under the previous administration, and they should be applauded for doing so. And you are applauding, thank you. The program is doing tremendous work through bipartisan support and leveraging limited public dollars with private investment in order to collateralize public housing assets to better address the enormous capital needs and allow us to preserve and maintain much needed affordable housing units. We actually believe we are still in the early growth phase of RAD, and we hope to eventually remove the cap altogether. Well, again, I want to appreciate the opportunity to be here and for all that all of you do to enhance affordable housing and to assist HUD in its mission to serve low and moderate income households and to expand the possibility of Americans looking to achieve their goals for their families. I look forward to working with you further as we forge ahead to improve the freedom security, and yes, the quality of our economy, both in the housing market and beyond. Thank you again for the opportunity to speak to you today, and have a good conference. Thank you.